Good day Forex trader. Your USD Forex Signal, bears compressing price down to $1.1260 area. Today's your USD signals. Risk 0.75%. Trades may only be entered between 8 a.m. and 5 p.m. London time today. Short trade ideas. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.1316, $1.1336, $1.1360, or $1.1394. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. Long trade ideas. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.1261 or $1.1250. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Your USD analysis. I wrote last Thursday that bulls seemed to have the advantage, with buying continuing below $1.1300. I thought that a bullish bounce at the new support level of $1.1315 could produce a good long trade entry signal. I also thought a short trade below $1.1315 could be good, but only on a failed retest following the breakdown. This was a good call insofar as it prevented entry into a failed short trade. I was right about seeing the $1.1315 area as supportive, as the main action of the past few days was buying below that level, pushing the price up. We have seen bears, helped by recent strength in the US dollar, continue to push the price down and compress the price as new lower resistance levels are printed. However, we just get a compression because the support beginning below $1.1300 at about $1.1261 continues to look very firm and make its presence felt. So, we have a close fight between bulls and bears, and it is hard to tell who is going to win over the medium term. This is helped by the fact that the euro is relatively strong, just like the USD. I see the best strategy for today in this currency pair as scalping reversals at key levels, and I suspect the best potential would be along from $1.1261 or $1.1250. It will be important to monitor any open trade on a short time frame and to be quite quick to take profits, and to use tight stops. Gbp Usd Forex Signal, more upside ahead of ADP estimates. The pair will likely keep rising as bulls target the first resistance level at about 1.3600. Bullish view. Buy the Gbp USD pair and set a take profit at 1.3600. Add a stop loss at 1.3500. Timeline, 1 to 2 days. Bearish view. Sell the Gbp USD pair and set a take profit at 1.3500. Add a stop loss at 1.3600. The Gbp USD price rose to a key resistance level after the UK government ruled out further COVID-19 restrictions. The pair rose to a high of 1.3550, which was also the highest level on December 31st. It has risen by 2.85% from the lowest level in December. UK and US COVID surge. The UK and the US continued seeing a surge of the number of COVID-19 cases. In the UK, health officials confirmed about 187,000 cases on Tuesday. Similarly, in the US, the number of cases jumped to more than 1 million, which was the highest level on record. This trend will likely continue because of the interactions that happened during the holiday season. Still, analysts are optimistic that the number of cases will start to decline in the coming weeks. Also, they recommend that people should focus on the number of hospitalizations instead of the daily tally. That's because the Omicron variant is relatively mild and most people are getting well within a few days. This explains why the UK government has been reluctant about imposing new lockdowns. The GBP/USD also rose after the UK published the latest lending data. According to the Bank of England, consumer credit jumped to 1.23 billion in November. In the same period, more than 66.9k people were approved for a mortgage, while mortgage lending jumped to more than £3.69 billion. Additional data from the UK showed that the manufacturing sector did well in December. According to Market, the manufacturing PMI rose to 57.9 in December. This was an upward revision from the previous estimate of 57.6. Later today, the GBP USD will react to the latest ADP non-farm employment numbers data. Economists expect the data to show that the private sector added more than 400k jobs in December. These numbers will come 2 days before the official non-farm payrolls numbers. GBP USD forecast. On the 4-hour chart, we see that the GBP USD pair has been in a strong bullish trend in the past few weeks. As a result, the pair has moved slightly above the 50% Fibonacci retracement level. The upward trend is also being supported by the 25-day and 50-day exponential moving averages, EMA. It has also moved slightly above the standard pivot point. Therefore, the pair will likely keep rising as bulls target the first resistance level at about 1.3600. This view will be invalidated if the price moves below 1.3500. AUD USD Forex Signal, indecision as AUD forecast trimmed. The pair will likely remain in this range today as investors refocus on the upcoming US jobs numbers. Bullish view. Buy the AUD USD pair and set a take profit at 0.7300. Add a stop loss at 0.7185. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7200 and a take profit at 0.7150. Add a stop loss at 0.7250. The AUD/USD pair tilted upwards as investors and analysts priced in ending of Australia's quantitative easing, QE, even as the number of Omicron cases rose. The pair is trading at 0.7237, which was slightly above this week's low of 0.7183. Australian QE nearing its end. Like other major central banks, the Reserve Bank of Australia, RBA, implemented some important measures in a bid to cushion the economy. The bank decided to lower interest rates to a record low. It also decided to implement a historic $326 billion quantitative easing program. Now, analysts believe that the bank will terminate the QE program as soon as next month. A survey of 30 economists by the Australian Financial Review showed that most of them expect that the bank will end QE in February and then implement the first hike in June 2023. A third of analysts expect that the bank will hike in the third or fourth quarter of the year. This is at odds with what the bank has forecasted. In the most recent decision, the bank said that it will only hike when actual inflation moves between the 2 to 3% range. It estimates that this figure will be reached in 2023. Economists polled by AFR expect that inflation will rise to 2.44% this year. At the same time, most analysts downgraded the forecast for the AUD-USD pair. They see the pair rising to 0.73 by June this year. In the September survey, these analysts had a median estimate of 0.7400. They pointed to the ongoing divergence between the RBA and the Federal Reserve. The Fed has hinted that it will implement 3 rate hikes this year. Looking ahead, the next key catalyst for the AUD-USD pair will be the latest US jobs numbers from the United States. AUD-USD forecast. The 4-hour chart shows that the AUD-USD pair has been in a bullish trend in the past few days. The pair has risen by about 3.45% from its lowest level in December. It has also moved between the ascending trend line that is shown in red. Also, the pair has risen slightly above the first support of the standard pivot points. It is also along the 25-day moving averages level. Therefore, the pair will likely remain in this range today as investors refocus on the upcoming US jobs numbers.